And welcome to the podcast, Unlocking the Hidden Value of Your Life Insurance, hosted by Rob Haynie and Mrky. Glad to have you with us. And guys, it's good to be with you again. What have we got on the table today?
We're back, Bill.
Bill, we've got Mr. Matthew Ganovsky of Abacus Life on with us today, which is going to be a real interesting conversation. We have a lot of history with Matt, all good, dating back into the early 90s. And we're going to talk a little about where we've come from and where we're going and all things in between.
Very good. Well, I look forward to this conversation. I've yet to hear a bad or boring conversation on this topic. And with my endorsement, please take it away.
Sure. Now I'm going to jump in because, I've been in this industry for 25 years, but the two people we have on our podcast today are, they're some of the originators of our industry. I don't know if originators is the right word, but pioneers. Maybe that's a good industry. I met Rob way back in the mid 90s. He was working for this company, Medical Escrow Society. It was, called Viatical Settlements there. And Matt was working with him. And now you fast forward to where we're at now. And boy, has the industry changed. I mean, it's gone from a viatical settlement industry, which we've talked about before. That was a different clientele, to where we're at now. We're now in this life settlement industry. It's becoming a more thought out industry. It's a heavily regulated industry. It's an industry that consumers, need to be aware of. But the two guys that are, here on this podcast, well done, boys. You've been in this industry for a long time. You've done good things with our industry. And Matt, we appreciate you coming on and giving us your insight from a buyer's perspective. So, Rob, I know you got a ton to talk about. You got more history than I do with Matt. But Matt, I'll start a question off with you. But, tell us, you started back in the day as a viatical settlement broker. You moved to a life settlement broker to where you're at now. You're now a life settlement publicly traded, which, well done. The first company in our industry to be a publicly traded company, which I think that's outstanding representation for our industry. Our industry needs more of that. So, tell us your history, Matt, and where you started, the journey to where you're at now. Give us a short synopsis.
Well, good morning, guys. Thank you for having me on your show.
Sure.
Well, as you mentioned, I started in the 90s. I was hired in 1996. My first day on the floor was January of 97. And that was back in the day where we help people living with life-threatening illnesses like HIV, cancer, and ALS. And that's kind of where I started. That is where I started. And I started as a client service rep, reaching out, taking calls, and help people sell their policies at that time. And I believe back then, what's the major change that I could see is probably in the death benefit of what we used to sell. The average might be 100, maybe 125,000, to what life settlements today, the averages is like 1.5 million. And we can go on that later. I was there for a few years. I stayed there to the end of 2000. And we were in a transition period that the owner of the company we felt was not going in the right direction. And she wanted to stay in the viatical space, and we saw it different into the life settlement space, and she couldn't do it. So I was fortunate enough to be asked from Scott Kirby and Sean McNeely, would you like to start a company with us? And we started a company called Advanced Settlements. And I was very fortunate to really work with those guys. And you talk about origination, their job was, or they were master originators as far as I'm concerned. And I learned a great deal from that. When you're a master origination, you're calling on people that know nothing about our business, nothing about life settlements or going into it. And we're talking to very high-end insurance agents, probably top 3% in the country, dealing with most of top 1% of wealth. So it takes a different type of person and a different type of outlook to get somebody's attention. And we started a company reaching out to life insurance agents to educate them on this business. And at that time, the business wasn't even regulated. It was regulated in very few states. But needless to say, there wasn't licensing that was going on. So it was very easy to build out a company because it was easy access. There were no barriers to entry at the time. Just basically had to have a life agent policy, and life agent license, and you could conduct business. And so we worked at that for many years. to about 2023. Sorry, not 2023. I'm here. God, 26 years in business, everything rolls in there. But around 2003, we were approached to be bought by a company called National Financial Partners, NFP. And we were only 3 years into our business. We're starting to see it explode. We wanted to get to the next level to work with the institutions that are out there. And we thought that it would be very good to have this great brand behind us to reach out to agents to have some credibility versus a lot of our competition. At the same time that we were doing that, we also, Sean had a good eye to look into the future and see things far away, close up, so to speak. And so he got with an investment banker out of New York, Craig Seitel, and they started Abacus Settlements. And and we knew at the time to get closer to the money, control the money, you'd have to have a license, and you would be able to work on the institutional side a lot better versus being a broker, because you basically had the same license as a banking license. Very, very difficult, very expensive to obtain this type of license. So we worked out in New York for a while. We ran their brokerage office out of Orlando. At the time, we were probably one of the largest brokers, probably 100 employees, and everything was going great. I mean, it couldn't be any better. And then around 2006, 2007, that housing prices started to come back, started to compress, money started to disappear, and we saw the market collapsing because there wasn't money to buy policies out there. So, and it was tight. A lot of companies, brokers after broker after broker went out of business. The few that stand today are the pioneers. The few that stand today have passed the test and have the fortitude to do it, because it's not an easy business. So we still worked the New York side with the money. We broker side in the broker out of Orlando, compressed everything here where it was a lot smaller, and navigated through those difficult times. About the same time, Craig Seitel was having some personal issues, some health issues, and was an option for us to buy him out. He ended up having cancer and passed away, sadly, a couple of years later. But we ended up buying the company, and myself, Sean, and Scott owned it collectively to have Abacus when he was out. And around the same time, again, NFP came back to us and said, "Hey, why don't you? Would you be interested in buying Advanced Settlements back?" And we thought about it. Said, "Yeah, we'll buy it back." So we bought the company back. So now we bought Advanced back. We got Abacus. So the next step is, look, we saw basically the same business model, being a provider and a broker, as one. So what we ended up doing was collapsing the broker, got rid of Advanced Settlements, and then concentrated on Abacus going into it. And at that same time, we were in license. We were trying to get our license in the state of Florida. So once we obtained our license in the state of Florida, then we moved the full operation here and built out Abacus. And that was like 2014, 2015. And it was very difficult because with Advanced, we had a lot of national accounts. We had a lot of messaging and brokering. And essentially, we had to start over. So myself, Sean, and Scott were sitting in there, and we have offices. Maybe I think we maybe around 10 people, and we're looking. Can we do this again? Do we have the energy to take this to scale? Take this across what we did before, because we had a very successful business model and had a lot of market share as a broker. Well, we were tired. And, Scott and Sean and myself, we've been really good. Like I said, they are master originators of what they do, and built a really good insurance base and origination base. But we didn't really know how. We couldn't get to the capital markets, so to speak. We could talk to the level of 50 million, 100 million, or a German. We really didn't have the experience of talking to, billions and billions of dollars, KKR and Apollo. And it's not that we didn't have it, we just didn't have the experience to get in there. How do you get into the door? How do you go into KKR and say, hey, you want to buy these policies? Hey, this is a great rate of return. This is what we do. And, the messaging. And, so we ended up finding Jay, fortunately, and brought Jay down here. And Jay mapped out a plan and said, this is what we have to do. And it was a difficult plan. We had to get, 100 million underneath management and sell and show a history. And with history takes years. So it took a few years to develop that and get the right audience and the right people, and don't lose your opportunity where you're in front of them, because, you may get the opportunity, but if you don't check the boxes, it's a waste. And fortunately for us, he knew the boxes. He knew them all. And I say all, I mean, loosely, but a lot of them. And he was able to get us to the institutional side to talk to groups that are out there. And then when he took our message out, and I believe it was 2017, 18, he went on the street and went to the institutional buyers on Wall Street and had 4 offers from big groups. And one of the groups that we ended up doing business with was KKR. And that was a big deal, because a lot of people look at settlements, they just don't understand. First of all, you say settlements has a negative connotation to it, right? People look at you're selling something, and we really had to change our messaging for them to kind of look at it. And we said, listen, you're not selling anything. Right now, we're giving you an option. And a lot of people don't know about this viable option because it's not on the life policy. And that option is, yes, you can sell that policy. Hey, did you know you can retain some of the death benefit, have a paid up policy, or do a blend of cash? So we had a story, and then looking at getting the money attracted. So we ended up doing a deal with KKR. And I got to tell you, the due diligence of what they did, and wanting to know your first grade teacher and your third grade and what you got grades in fourth grade, fifth grade. I go, what the hell? I don't want to go do this. Is this what Wall Street's about? I mean, my God. So they picked us apart, everything. But they liked it, liked the story, went through everything. And we knew that if we had a great brand name in the business, that it's not only good for me, it's good for everybody. Because here we got this capital market, this big capital player that's on Wall Street saying yes to something where everybody said no. And that helps everyone going into it. So we saw it as a big deal for us, a big change for us. We had to change in a lot of areas where we had to make them better as far as compliance, marketing, messaging. They helped us brand it to a real industry that hasn't had this set of eyes on it before. So we took it as a challenge, and it was challenging. It was challenging with the growing pains. It was challenging doing certain things there, but for growth, you have to do that. And that's what we did. And we've capitalized on that message with other groups. After we did the deal with KKR, we had other groups that we worked with, and we have internal funds, external funds. And so we're able to work on the institutional side where we have various options for certain products. And as you know, every product that you have is like a snowflake. Every policy is different. So you'd look at a policy and it might be, but this person might have cancer. Well, I don't buy cancer, but this buyer does buy cancer. People will say, well, what is your rate of return? I said, well, your rate of return is of what you're buying, because there's different risk metrics that go into it. So if you're buying a policy that matures at 95 and you're 80, my rate of return is going to probably be 20, 25%, right? Because I'm worried about it going long. If it's a GUL and he's 85, I'm going to drop it down to 10%. So it depends on the case because of all the variables that are put into it. And for us, if we were going to scale, we would have to be able to occasionally dip to a $50,000 policy, but also have the bandwidth to work on a policy that's $200 million on one insured. That's what institutional capital does. It broadens what you have and makes it bigger to scale where everybody can benefit from it. And that's what we saw, and that's what we still see today going into it.
You gave us a great story there. And I think as a broker, which obviously my firm is, you're a buyer. That's a question that we get time in and time again, whether it's from a client that's called us direct or whether it's from their trusted advisor, is who is buying my policy? And I'm glad you touched on Wall Street. I'm glad you touched on Apollo, KKR. But if you get that question sent to you, Matt, who's buying my policy? Give us a short answer.
What's I don't know if there's a short answer, but here's my answer. I go, I'm not buying your policy as Matthew Ganovsky, waiting for you to die. I'm buying your policy with 100 or 200, 300 policies. So I'm looking for a curve or a rate of return that goes into that, to that metrics. So if you died today, yes, that sounds good, but it doesn't really help me because I'm long term going into it. So I'm here. I'm not here to buy your policy as cheap as possible, hoping for you to die. I just want to make sure that my underwriting, my numbers are correct. You get a fair price. The broker gets fair. All three of us in the transaction has to be equitable, or it doesn't work. And back in the early days, there was a disconnect there. There were certain groups that made all the money. If it was the consumer or the broker or one else, you can't have that for scale and growth. And I think with the maturity of the market and what's taking place now, as you see the perils of everybody looking at it, where everybody makes money, but not everybody's going to get rich just off on one case.
Right. Would you say, is this a fair statement? Because again, this is a statement that I usually convey to my clients, is that when you sell your policy to a provider like an Abacus, and there's several other providers out there, that really you're selling your policy that goes into a portfolio. That portfolio could be owned by a hedge fund. It could be owned by a pension fund. It could be owned by a KKR, an Apollo, but you're really representing an institutional fund that's really doing nothing more than transferring the ownership to Abacus, a licensed provider, and that policy goes into a portfolio that over time will pay a return within the portfolio. Fair statement?
That's correct. Yep.
Good.
That's fair.
Let me chime in, Matt, just to make you feel a little better. That was the best answer I've ever heard in my life.
Which one?
Because the one that took 15 minutes.
It was long-winded.
but I'm saying that's important for people to hear, that you're not buying a single policy hoping that person passes away tomorrow. And we get that. That's probably the biggest misconception in our space has been, well, what if? You know, we always have to talk about, well, you know, what if they buy your policy and they think you're going to pass away in 3 years, and 10 years later they're still paying your premiums? I mean, that's how it works. It's a bell curve. And I learned a long time ago that the life expectancy is the beginning of that curve and the end of that curve. Everyone thinks, no, it's the middle. Like, no, somewhere along that line, you're going to pass away. And that's what they're trying to put into that portfolio. Does it fit their eye? Do they like the carrier? Do they like the premiums? Do they understand how the premium is going to work in the future? And it's very complex, but bringing Wall Street in and expertise like the three of you had and Jay combined helps people understand that this market is here for the long haul. That it's not, you're not in this to be around next week. You're in this to be around 10 or 15 years from now.
That's right.
And I think are longer. And I think
I don't
that's
know
the most
longer,
important
Rob.
thing.
I would be. I'm getting tired, but I got still.
Not
I
you.
Still,
not
okay.
Not you. We're gonna keep. I'm keeping you around longer.
Yeah.
Just you don't know it yet. The only thing I would say is maybe you didn't do a good enough job talking about was how well you guys market. Okay. I always kid Jay in person and say that next to Mr. Rogers, he's the second most famous person on TV wearing a sweater. But that is vitally important to the industry. You talked about it helps everybody, right? The rising tide theory. That advertising that I see on behalf of Abacus and others is helping me. I get calls all the time. Hey, that's a great commercial. I didn't know you guys ran commercials. And I said, we really don't run commercials. But what caught my eye, one of Jay's most recent posts talking about the Hallmark Channel and the Buffalo Bills Christmas story. I think that is, my mother watches the Hallmark Channel religiously. She watches the Hallmark Christmas movies in July when we're in Cape May, and she watches them now. That's a different audience that's on CNBC, Fox Business, MS Now, all those different shows that we typically see your channel. Talk a little bit about that and tell me if you have dug into that and really thought through it, or you're just waiting to see what happens.
I think waiting to see what happens. I don't know in the marketing department, but it's just you have to try things. You have to go into different markets because you don't know until you try. It is expensive, but you have to do it if you want it. If you want this industry to grow where it needs to be, it just needs to be not us and one other company. And I think that if there's any similarities of all the companies, the messaging really needs to be defined and get rid of the connotation of settlements. I like options. I like, hey, listen, you got the options with a free appraisal to let people down. It's not a hard sale. I don't want, if I'm dealing with a client directly and he doesn't want to sell his policy, I say, look, get with your family. Go ahead and do it. I don't need, I have this business. Make sure that you're correct because it is final and it's a big decision. We have very complex cases where you have trusts and corporations and trustees. So we know it's a big decision, but it's also a viable option for so many out there. And marketing to those different groups, if you're to the trust or the wealthy or, the mainstream, it takes trial and error because there's not a lot of history of somebody doing this.
No.
There's not anybody can track it. We did this many and we got this many impressions. So I think it takes a lot of everybody doing a little something. I mean, if you're in the agent, you have a different marketing. If you're in a client direct, you have different marketing going into it on the agent side. And of course, I work with brokers. I call it the conflict division. It's very difficult because I wear many hats. But it's fun. I was a broker at one time, so I kind of know, or think I know, really how what works. And I kind of like my little carved out space in this company.
Have you seen, speaking of your ads and the others that are out there, have you seen a steady uptick, a steady increase over the last 2 years in your client direct and your advisors coming to you? Are you starting to see that return of your money? Because it is expensive. We know that. We've heard what it costs for groups like you to advertise. Are you seeing that pay off? Are you seeing these consumers
I
coming to
don't
you?
see, I haven't dive down to what the actual numbers are with marketing. I'm sure that it has, or we wouldn't be doing it for the years that we've got going. But as far as the rate of return or what we're doing, how much money we spend, I don't have it. I'm sure the data's here somewhere. Somebody want to know, but I just don't know. I do know that you do get calls from advisors because it does help out. Say, hey, my client wanted me to call you. We get a lot of those, just like my client wants to call, Rob, right? Hey, I saw this commercial. Hey, don't you guys do the same thing? So I think, that awareness is helpful to everyone. Just more people need to still doing it and maybe change messaging a little bit, but make it a very positive,
Yeah,
professional
and I,
look.
I pay attention to marketing podcasts. I listen to a few of them. And one of the things they said, which I could take away, this will kind of help this conversation. As you build awareness, you're going to get people that call too soon in the cycle. They're just too young. The policy's expensive, and for their life expectancy, it just doesn't work. They may even get a lower offer. They don't want to take it. But as you continue to market, that slug of people that have already come into the funnel continue to move through the funnel as new people come in, and you start to see an uptick every year because those people that you talk to in 2022, 2023 are now back in 2026 saying, okay, now I want to sell.
Right. And they're educated, right? So now they
They're
know
educated.
going into it, you don't know who they're telling. They're on their
Correct.
friends going
Exactly.
into it. So, the educational piece alone of the awareness, what you're trying to do, that even though they might not qualify, just like you said, but it's already doing something. You've got growth in the industry is going to happen just like it's 2 years, 5 years, 10 years, 20 years. It's there, but it needs more people giving the message out there. And,
Right. Just education. I mean, how many times, we can all say this, how many times do you go into a large audience and talk about life settlements very simplistically, and there's a great majority of people have no idea what you're talking about in 2025.
Yep.
Like, no idea. Like, what do you mean you can sell your policy? And you're like, you can sell your policy just like you can sell your house. And they're like,
right.
I don't get it. And you're like, no, you can change the ownership. You don't live in your policy, you live in your house, but you can just change the ownership. It's the same type of an asset. And it just takes a long time. But your commercials continue to, what I like about your commercial is you don't change it. It's the same commercial. It's tweaked a little bit, but it's the same message over and over and over. Jay's very upbeat in it. And I think people feel comfortable, like this, okay, this guy's telling me, and it takes a while sometimes for people to understand what is it they just heard. And then when they see their insurance premium, you hope to time that with the follow-up of the commercial 15 seconds later on TV. Mark, you have a question?
Yeah, I mean, your commercials are outstanding. The consumers are getting this sense of, hey, I have this option. All too often, especially if you're a consumer that owns a larger death benefit policy, $1 million or more, 2, 5, they're probably going to go back to their financial advisor and say, hey, what is this life settlement option about? And the Insurance Studies Institute put out a study, this was several years ago, that 90% of the time, clients are letting policies lapse or surrender, and their insurance advisor, their financial advisor, their CPA, whoever it is not bringing the life settlement option up. I think that's changing. I know that's changing. We're starting to get more buy-in. But one area, and I don't know what your thoughts on this might be, Matt, but one area that sometimes we run into a roadblock are carrier restrictions, broker-dealer restrictions, IMO restrictions, where a financial advisor says, yes, I know this is a good idea for my client, but my BD doesn't allow, my broker-dealer doesn't allow, my insurance carrier doesn't allow. Where do you see that trend hopefully changing as we become more regulated, which I don't know if our industry can become any more regulated. We're a very tightly regulated industry. There's full transparency across the board. As a broker, I have to show bid disclosure, I have to show commission disclosure, but we still have this audience of broker dealers and carriers that say no. We're not on board with settlements. Where do you see that industry changing as we mature as an industry?
I think it is changing for the past couple of years since kind of been really falling. And there's a lot of broker dealers now that have accepted it and use it. They may not want to bring a lot of people on their platform because it's not something that they want to push, but they know they need to have it as an option. I see the carriers, there's only a few. I mean, they've adopted, but you get pushback. But it is changing. It's here. If you want to get into the broker dealers and fronts, have a great story. Have a good compliance booklet, right? Because they're worried about being sued and they want to make sure everything's right. It's not a moneymaker for them. They just don't want any aggravation that goes into it. And it's real important when you're talking to a broker dealer is that, you're working on the institutional side. Who's the money? Who's the counterparty that owns your policy at the end of the day? And, I think that is missed greatly. We have not done a good job is most people, when they sell a policy, how much do I get? How much do I get? How much do I get? Yeah, that's important, right? But if you're worth $1 billion and you're selling a 10, 20, 30, $50 million case, who's owning the life on me? Who is the counterparty? Who is the company that I'm doing business with? Who's then the agent or the person you're working with? This is number one client. Yeah, you may be a lower number, okay, because it doesn't make sense, but you're a much better company that you can go to sleep at night knowing that my client's not going to get calls. There's tracking, there's all kinds of things that go into it, and this is who they are. This is their past of, if they have a litigation past, you can go into that. They can dive into any of the people, their principles, and really research that. And I think on policies, especially for broker dealers, and you have people that are representing your company, make sure you have the right people pushing them because they're going to do a background check. They're going to do a KKR on you. And there's no hiding from a KKR on you. Nothing. Zero. And it's all going to come out. And again, it took you months, maybe years to get that in front of somebody. Know the box before they say you didn't check the box before you get there.
Yeah. Rob, anything to add to that?
No, I mean that's a great explanation. It's very complex. I'm frustrated as Mark is that there's more people don't accept it, don't understand it. A lot of the times it's a waste of time. It's a waste of time. And I've always viewed this as most recently as like rather than lead with life settlements, we've been just talking about the result of a life settlement without talking about the life settlement per se, such as you're trying to sell annuities. Your client wants an annuity, needs an annuity, can't send the money to buy the annuity. He's sitting there with life insurance policy he or she doesn't want. You go, well, there's your source. So to Matt, your point, option. What are my options? What's the number I'm thinking about from selling my policy, and does that achieve my objective of getting enough money to buy that annuity? And many times it does. So you haven't lost anything. You've actually gained another sale. There's another commission that takes place. They receive. So is the broker dealer. More assets under management. Everybody wins. That's the story we try and tell. Not so much, hey, look at this life settlement commission you're going to make when you sell your policy, because in the grand scheme of things, it's not a lot of money compared to what they're going to make in the commission on the annuity. So we've seen broker dealers that have gotten in trouble and one of them, as a matter of fact, without mentioning their name, I say this a lot, but they got sued because one of their RIAs decided that he didn't think it was worthy of investigation to see if this surrender value could be beat in the settlement market. So he told the client to take it. Well, 2 weeks later, they saw a commercial on TV. I don't know if it was yours, but there was a commercial. And they investigated and found out they could have got about $1.2 million instead of like $113,000. Broker dealer got sued. Broker dealer did nothing wrong. The RIA no longer works for the broker dealer, and the client got paid by the E&O company, right? The E&O insurance. So that's something it's an easy fix. It's just talk about it. Go talk to Mark. Find out what it's worth. If you don't like that amount of money or there's a decline, put that in the file. The client can't come back and say, hey, you never told me about the settlement market. And I said, well, I did. And you weren't eligible. So that's about the only thing I'd add to that. But other than that, I would just say the last thing I'll say, and I'll let Mark close, is Abacus has become a household name, certainly in our industry. But in going forward, and the other things you're doing, and I think in the future you're building a company. It's not just life settlements; it's a whole bunch of other things. And I just want to personally thank you and your company, Sean, Scott, Jay, for your involvement, and obviously now Samantha, who's now on the board of Lisa, for your leadership. Again, that type of name recognition at the top of the Life Insurance Settlement Association is pivotal for us. It's a big deal, and I just want to just say publicly on the record to thank you for that, and thank everybody for it. It's a time drain, as Samantha's going to find out. You spend a lot of time with that, but I think it's important stuff.
Yeah, and I think that's what we all just talked about here, and I'm glad that's the kind of the direction of the conversation has taken, is that we're just an option. So if you're a financial advisor or a consumer sitting here listening to us, this isn't just a single transaction and how much do I make and what do I get. No, I had 3 emails just this week, and we're only into Tuesday, about an advisor came to me and says, yeah, my client has the policy, doesn't think he needs it, low cash surrender value, he thinks he can sell it and take that money and move into another option. One of those options was long-term care. Another email was on an annuity. Another one was just taking the money and funneling it to their brokerage account. And I had to explain to this advisor, because he was brand new, several advisors that the emails came in from, they were brand new to the industry and they didn't understand all the mechanics that we just talked about. Who are we selling our policy to? Abacus, you're an institutional fund. You're a well-known name. You're a television commercial that I see Jay Jackson all too many times, but hey, it is what it is. But our industry is maturing. And that's the most important thing, that as people are listening to our podcast here, that all we do is provide them an option to have their policy appraised for free, have a group like Matt's Abacus, a publicly traded company, the first company to be publicly traded and get into or be in our industry. And now you can sit down with your client and and I always say this, a life settlement is probably the most comprehensive view of why it makes sense to sell a policy, or perhaps not. Maybe our offer comes back isn't appealing. Maybe our offer and the life expectancy mortality studies that we do share make the client question, maybe I shouldn't sell a policy. So we sat and talked about options for the last 20 minutes. That's perfect. That's what, I wanted to hear on this podcast, because we have one of the largest buyers here with us. Hopefully we continue to see your ads on television, because all it does is create a better industry. Like Rob said, I see your ad and I usually can see 4 or 5 calls come in throughout the week saying, yeah, I saw your commercial on television. And we remind people, no, that's not us. That's one of the buyers that we utilize as a broker. But
I don't actually say it's not us. I don't say, I'm not.
But as we
That's
mature
us.
as an
We're the
industry, yeah, there you go. But yeah, we have to tell this story over and over and over, that, yeah, we're just an option. If you've got life insurance and you're one of the 500,000 people that let your policy go every year, and that's a very real number, that you have to look into a settlement. A settlement may be a fit for you. It may not. You never know until you look into it. So hopefully when we have this conversation 5 years down the road, if you're still sticking around, Matt, all broker dealers have bought in, carriers have bought in, IMOs have bought in, to where this just becomes an option that is always explored. Because right now, I just know it's not an option that is being explored enough, and that's why we're having these conversations. So, Matt, we appreciate it. We hope that more people listen in. We hope that you share this podcast with your audience. You have a vast network of advisors, consumers, whatever it is, and as you said, this is an option that is worth exploring.
Just one thing to add to that, Mark, on the options.
Go.
Just real quick, guys. Sorry.
No, go.
When I have meetings with client director agents, the olden days would just get the policy in. But on every case, the industry needs to do a better job of, why are you selling? Not because I can't afford premiums, not I need the money. Because when you talk about the options, you can talk about the different product that you can put into them, because they may need it for estate taxes going into something. If they want to go, I just want to see how much my policy's worth. We can do that while pulling out the APSs and everything else. We can make it so simple. So asking that question will help companies like yourself and companies like ours that are scale to really do a deep dive of why they're selling, where you can help the client, versus, hey, I just want you to sell it to me, where you really want to have the right product in front of them.
That's a great point. I'm glad you said that. And that's a snippet maybe we can take and advertise as, why are you selling? Because It is, and I ask it all the time. Why does the client want to sell this policy? Whether I can look at a policy and say, wow, I know why they're selling. It's garbage. It high premiums, low cash surrender value. But yeah, why you're selling your policy is so important, because we can give them an answer on the spot typically. Hey, here's what we think a bird's eye value is. Or if we want to dive deeper and collect medical records and do what we do and send it out to the industry, we can do that too. So that's a good point, Matt.
Real quick, we're just seeing an uptick on our side, Matt. You probably are on yours for certain, is that these folks are trying to figure out how they can get more money to retire. And specifically, are they going to go into some type of adult living community, assisted living community? Or are they going to age in place? And this money is vital to make that happen. There's no other resource for them available. We're not talking about the higher end client that's got estate tax issues. This is for the folks that just can't afford to go into a basic assisted living facility, and they don't have the money. And life settlements could be a lifeline if they only knew they could do it. So your commercial, again, when I go back, I talked about the Hallmark Channel. That's going to be the audience you got to get there. I'm going to predict that right now. It's no problem. So, Bill, what do you got to say?
Well, I sit here, I hear a lot of conversations on a daily basis about alternative investments, because people are interested in trying to add to their portfolio outside of stocks and bonds, because they're sketchy about bond market. They're a little unnerved about maybe the prices of stocks, and they're like, where do I put my money? So every time I listen to a conversation like this, I think about how this product sounds like a really interesting alternative investment. And that's why that's why I enjoy working with you guys, first of all, and why I find these conversations so interesting, because I came into this relationship with you all not knowing anything about this industry. And now I feel like, hey, this is something a lot of people should be much more aware of. And today's conversation was great because you talked about it as options. And I think a lot of people are just simply looking for some kind of option, which leads me to, Rob and Matt, ask you, if people are listening to this podcast, are interested in a further conversation with you, or whether they be brokers, be they dealers or individuals, how do they get a hold of you?
Mm-hmm. Well, I have the last name Ganovsky. There's not many of us, for one. Other than that, which is my son, which is Matthew Ganovsky, and he's a doctor, and I'm not. So if you get him, that's a little bit different, after 25 years. So I'm not hard to get a hold of or track down for sure.
Great. Rob, Mark, how do they get a hold of y'all?
Now you always know me, Mark M at lisettlements.com. Always reach me on my cell phone at 954-326-9378. Rob?
Rob Haynie, Rob at lisettlements.com. And my phone number is 954-599-4433.
Great. And for those of you who are listening, who maybe you're out on a walk, you're driving your car, or whatever you're doing, you can't write stuff down, the contact information will be in the show notes, so you can just check in there and be able to get a hold of everybody.
Hey, Bill, can I just put in there Matt at Abacus Life? Then I didn't know we were going through that to get contact.
You
that's
can't put
easier
that in
than
there,
trying
Matt.
to spell my last name.
You missed your chance.
Right.
Matt at Abacus Life.
Abacus Life, yeah. That's
excellent. Thanks again for coming on the show, Matt. Really, really do appreciate it. Interesting and well-spoken conversation. For those of you who are listening who are not subscribers, here's something you can do immediately. It takes no effort. Just hit the follow button, become a subscriber. That way, every time there's a new episode, you're notified. You can give it a listen. I'd also urge you, if this is your first time listening to the podcast, go back and listen to the episodes in the library. I really genuinely believe you will find this fascinating, illuminating, and you'll learn something. And there's not every day you can say you learned something. So do that. We'd appreciate it. And if you find it interesting, tell people about it. Word of mouth promotion would be very helpful. We'd thank you for that as well. So until next time, I'm Bill Tucker. On behalf of Rob, Matt, Mark, and Matt, and everybody in the life insurance settlement industry, thank you for taking the time to listen today. We'll catch you next time.
Thank you for listening to Unlocking the Hidden Value of Your Life Insurance, the show that helps you unlock the hidden value of life insurance. Click the follow button to be notified when new episodes become available. Visit our website at www.lisettlements.com or give us a call at our office line at 866-326-5433, extension 1017. You can also directly contact Mark Mrky at 954-326-9378. and Rob Haynie at 954-599-4433.